Naspers announced their results last night, reporting full-year earnings, which saw an increase of 30%. Lindsay Williams chatted with Naspers Chief Executive Bob van Dijk a short moment ago. Let's take a look at that particular discussion.
The year that was, I think, in many ways was an encouraging year. We have managed to grow our top line substantially and mainly driven by our internet operations, but as well a very solid performance from our video entertainment business. At the same time, we've seen our earnings pick up by about 30%, which I think is certainly a decent result. And we've managed to invest in a number of primarily e-commerce areas that I think hold a good deal of promise. And we're also seeing our video entertainment business invest successfully in DTT and other connected video experiences, and we believe that holds promise.
Yesterday, of course, we had a sort of concatenation of circumstances that came together and made the markets really interesting. Number one, we had the Greek crisis and the market's first reaction to react to that, if you like. And we also had the Chinese interest rate cut over the weekend, which affected Tencent and the Shanghai Composite, etc. So all sorts of things going on. But of course, you don't like to be out of the limelight for long, so you came out with your results. And we have to talk about the Tencent results. You own 34% of this company. The thing I want to ask you is, are you keeping up with the trends and the needs of your existing customers? Are you keeping ahead of the established competition, companies like Alibaba? And also, are you keeping ahead of the startup upstarts?
So we certainly do our very best at that. I think as a company, we realize that the only thing that's certain is that consumers will want more and they will want better products. And if I look at how the situation was 3 years ago, I think consumers get stronger aspirations sooner than they ever did before. So the world around us is changing faster and faster, and we are increasingly investing the time of our people to make sure that we actually get those trends earlier than we did previously, so that we can react against them. Because we're very much in a global world where innovation travels very, very fast, much faster than it did before.
Are you confident that this sort of growth that you've seen in Tencent since you've owned it can be continued, or is there any sort of note of caution for us?
So I think Tencent, if you want to form a view on them, it's always a good idea to speak to the Tencent top team. What we look at primarily is at the fundamentals. We look at the fundamentals of the Chinese market, which I believe are, from an online point of view, still showing a lot of growth potential. Right? Internet penetration, although it's significant, still has room to grow. And what we increasingly see is that innovation actually originates from China. And we see, for example, in online to offline, Chinese firms be way ahead of the rest of the world. Online fintech, I think a lot of the most exciting developments are happening in China. So I believe that both from a China online as well as an innovation point of view, we have a lot of confidence in the Tencent team to keep on a very strong performance over the years ahead.
Well, we've got to cover internet, e-commerce, video entertainment, formerly pay TV, and also geographies. I mean, you start, give us the highlights, if you would, amongst all of those that I've just mentioned.
Yeah, I think in e-commerce, we deploy most of our investment against two segments. One is classifieds, that is mainly known from the OLX brand. And in e-tail, we work with strong local brands across growth regions. In classifieds, we have, over several years, actually invested substantially. And that model, when it gets to scale, is a very attractive and defensible model. And we see more of our countries actually coming from that startup phase into the monetization phase. And some of our businesses are actually becoming quite profitable in Eastern Europe and in the Middle East. So it's been a big investment for the group, but we like how we see countries graduate from the investment phase to the monetization phase. A lot of work to be done, but it's on the right track. In e-tail, we see that consumers really like the experience. For example, the Take-A-Lot experience in South Africa or the Flipkart experience in India, and consumers are really flocking to it. Growth rates are in excess of 100%, and customers really like those. And we continue to fund those businesses that are, without any exception, run by great entrepreneurs. So those business segments are well embraced by customers, and we like the progress we see. In addition, we also start seeing new opportunities at a very early stage in, for example, online service like our online travel business in India, which is growing really rapidly, and consumers are particularly pleased with it. So new business models as well, but our main investments are in proven models that are showing nice traction.
Bob, you talk about spending. You mentioned spending, and spending is something you've never been shy of doing because you have to keep ahead of the competition. I think the spend number that I'm looking at is 10.7 billion rand, up 33%. You will continue to do so because you have to, I suppose.
The way we look at it is we judge individual opportunities on its merit. If we think we're going to get a great ROI, we invest. And over time, if we've seen our development spend increase, it's because we see more opportunities. And the bulk of our investment spend goes after business lines that are actually quite well proven. And of course, we need to execute well on those and make sure we get those development spend dollars back. But we're very diligent on looking at those dollars and making sure that we're going to get the right ROI from the money we spend today.
Koos Bekker, the previous CEO, said the following in the results announcement today, very quickly: competition is tough and global. Some emerging economies are struggling and consumers feeling the pinch. A note of caution there. Are you seeing any sign that there's been a difference between the first 6 months and the last 6 months of your year?
I think Koos' statement is a very true one, right? We are competing with global players in e-commerce and also in video entertainment, and these players are not going to stop in their current footprint, right? They're going to come after global emerging markets as well as some of the more developed markets. I think nothing has fundamentally changed in the second half as in the first half. I think that pressure is there, and it's going to be with us for a long time to come. So it's going to be up to us to have the right response to that, and it's not going to be easy.
That was Bob van Dijk, the CEO of Naspers, whose results were released yesterday.